Hello, and welcome to another Rottweiler tax video. In this video, I'm going to show you how a real estate agent was able to increase his income from one year to another, and yet pay much less taxes in the year he made a higher income than in the year where he made a lower income. Now let me ask you a quick question. Which one of the following scenarios applies to you? Maybe you've heard different things about what you're allowed to deduct, what you're allowed to write off, or you've been told that certain basic deductions are potentially an audit risk and so you're skipping them every year, things like the home office. Or maybe you keep getting different advice on whether or not you should set up an LLC or how that LLC should be filing your taxes. Or maybe you're actually past this point. Maybe you have an LLC and or an S Corp already, or maybe you're already maxing out your deductions using something like QuickBooks, something like MileIQ, and yet you know that there's more out there that you could be doing to save money on taxes, but you're not sure where to start. And likewise, you're concerned about whether or not you're doing things correctly. So I want to be able to show you a real life example of how somebody goes from making less money and paying more taxes to making more money yet paying less taxes. But before we do that, I need to go through 3 levels of tax planning with you. And everyone who's watching this should be able to fit into one of these levels. So as I'm explaining it, ask yourself which one of these levels you're currently sitting at. Possibility number 1, you've got no tax planning. You either have no business entity or you have one that you don't know how to use. You're less than 100% certain about your deductions and you're relying on a spreadsheet to track your income and expenses. And we're going to talk more about that in a bit here. And you're not using any kind of tax shelters for retirement savings or otherwise. You're just kind of, filing your return every year and calling it done. Or maybe you're at level 2 where you have some tax planning. Your tax plan is not in writing. There's a lot of assumptions and guesswork going on. You might be running an S Corp without running the proper numbers for salary, for recent regulatory changes. So your S Corp may be inefficient or it may be flat out illegal. And you're getting most of your write-offs, but you're missing others due to a lack of, more advanced planning and strategy. And then finally, level 3 is full tax planning. If you have a full tax plan, your plan is fully in writing and your business entity is optimized. You've actually run the numbers for every possible scenario and you know for a fact that the one you're using gives you the most advantage when it comes to how you report your income for tax purposes. You've implemented advanced strategies. You're using tax loopholes. You've factored in all the recent regulatory changes, the 2018 tax cuts. You're no longer pulling teeth to complete your tax filings every year. You don't have any big end of year tax payments. You don't have to write that big check because you've already made quarterlies, and the quarterlies you're making are reasonable amounts that don't hurt your cash flow because you have a tax plan that is in writing that's giving you a return on investment. So these are going to be your 3 different levels of tax planning, and most of you watching this probably fit into one of the first 2 categories. You either have nothing so far and you're looking to get something put in place, or you have some things but you're really not feeling too certain about it and you want certainty and you want to get more advanced strategies because they're out there. There's people like Donald Trump, Warren Buffett, very wealthy people in real estate and otherwise who are using different strategies that you may not be aware of and that your CPA has probably never heard of. So now that we've gotten through these different levels of planning, we can start to look at a real life example of what it looks like for someone to go from one of the first 2 categories all the way to the 3rd category and what these numbers actually look like. Let's look at the example of David the real estate agent. Now, this is based on a real client. What you're looking at is nearly identical to what was on his actual tax returns. So in the previous year, he had an income of $135,700. He paid $31,600 in taxes. Now, I chose this client because he's one of my many clients who is already at level 2. I have some people come to me who are, at level 1, and I have some that are level 2. At level 2, he was only paying $31,600. However, when we moved him to a full tax plan and he implemented as many strategies as he could, the next year he had an income that was higher. It was $169,900, and he only paid $12,200 in taxes that year. It really does add up fast when you're not utilizing as much as you can. You truly get hit hard, and the system really is rigged for business owners. This is the sort of thing that only applies to you when you get paid on a 1099, not so much when you get paid on a W-2. So now that you've seen a real-life example and exactly what the impact can really be, you're probably wondering, how in the world can we get those kind of numbers? Now, you already know the tax code is very long. It's, 70,000 pages to sift through. So needless to say, there is a lot of stuff there. It's no one thing that gets you $20,000, $30,000 back in your pocket. It's a collective of things. So let's actually talk about our process and the different things we want to do in a tax plan in order to get you these kind of results. Starting off with the simplest of things, you have your deductions. Now, deductions really are different for everyone. The type of deductions that are going to have a business purpose truly will be different for everyone. Even two real estate agents working at the exact same brokerage in the exact same market are going to have some significant differences in what they can truly deduct. Now, the other big thing that I want you to take away from this when it comes to deductions is some deductions require more documentation than others. Some deductions that you're going to be taking are going to require you to produce documentation on a monthly basis. So what this means is if you're watching this video and you're not doing monthly documentation to maximize your deductions, you are not maxing out your deductions, period. Now, a big point of confusion for a lot of people in real estate is setting up their business entity. Let me give you some clarity on why this is so confusing. The most common type of business entity is going to be an LLC. Now, an LLC can be taxed one of 4 different ways. The only way to know which one is going to be best for your situation is to run the numbers for every possibility that you have as an option and see which one comes out the best. Now, likewise, when it comes to setting up your business entity, compliance from a tax perspective is huge. Majority of S-Corps, I'd say 80% of the S-Corps I see, they are legal S-Corps. You are running the risk of audit exposure when you use that business entity incorrectly. And last but not least, you have retirement accounts. There are a lot of options. You have SEPs, you have Simples, you have 401ks, you have self-directed accounts. Making the wrong choice can actually create a liability for you. You want to make sure that you understand the implications of each account before you set it up. Now, once you've gotten past the more basic things, we start to get into the more advanced territory. Tax loopholes, this is the sort of thing that the quote-unquote top 1% tends to use. Even though anyone can use them, most CPAs and accountants are unwilling to implement tax loopholes or to even really dig into them. Tax loopholes are something that needs to be applied industry by industry. Now, you also have the Trump tax cuts, aka the TCJA, Tax Cuts and Jobs Act. It turned a lot of tax strategies that were used prior to 2018 upside down. So there's people who are doing things that were saving them significant amounts of money before, but now in the current state of things, it's actually losing them money. If you're watching this and you haven't changed anything since 2018, you're not going to end up on the best side of the TCJA. The TCJA was so impactful that there are people fleeing states right now because of some of the changes that were made. Now, advanced strategies. This is where things can get a little bit vague. It does encompass a wide variety of new and old tax tactics. If you're not sure if any loopholes or advanced strategies are going to apply to your situation, I would ask yourself all of the following things. And if any one of these applies to you, there's probably an advanced strategy or a loophole that you can be using that you've been missing out on the last few years. any of these things even remotely apply to you, I can almost guarantee there's at least one tax loophole waiting for you. Now, as we're writing your tax plan, we're looking to save you money by reducing your audit exposure so that there's less of a chance of something coming back to bite you later. So as we're going through the plan, we're going to be looking for a lot of things, and here's some of the more common ones. So as we go through the tax planning process, we're going to make sure we take advantage of as many strategies as we can to save you money, while at the same time minimizing your audit exposure as much as possible and looking to the future to see how we can continue to make sure those savings continue year after year. One of the most important things to remember about tax planning is it's not something you do when it's time to file your tax return. If you come to us next April when 2020 is already over and you're getting ready to file your return, it's not that we can't do anything, it's that the majority of what we're able to do will be gone. So now that you have an understanding of our process and how we get you the results that I demonstrated early on in the video, you're probably wondering what it would look like to work with us and who it is that we really look to work with. So I want to go over that with you next. So Rottweiler Tax might be for you if you're a professional who's looking to separate your business from your personal life. If you've gone through a lot of different accountants and you're just sick of the same old song and dance of, oh, there's nothing more we can do for you, and you know it's not true. If you're tired of hearing that same crap over and over again, this may very well be exactly what you're looking for. If your income has been increasing year after year and you're getting concerned about the tax bill, you think it's going to be really high. Or if you're behind on, paying/filing your taxes and you really want a plan to put the old years behind you, that's also something we can help you with. Our firm isn't really going to be a good fit for people who are looking for an inexpensive tax filing service. If you're looking to just get a cheap tax return done, this probably isn't really what you're looking for. If you're looking for something that is going to give you heavy ROI for the money you put in, that's the sort of thing that we're going to be able to provide you with. Now, we are fairly strict about the way we do things, and all the problems I told you about, errors on tax returns, people paying way too much money year after year, everything we do is designed to prevent those nightmare scenarios that way too many people have to deal with. So, we do require you to do tax planning if we're going to do tax preparation for you. We can prepare your tax returns. That is something that we do, but we want to have a tax plan done as part of that. Having that tax plan is going to make it so much easier for us to get your returns done without it being a headache. We do have a pretty strict no-show policy if you're a new client and you're looking to do a consultation. So, we do not accept an automatic booking again if you have a previous no-show. And all we ask in that regard is that you let us know as soon as possible if there's been an upcoming change in your schedule. Not everyone we consult with is actually made an offer to work with us. If we're going to work with you, we want to know beyond a doubt that what we're doing is going to help you and it's going to have a huge impact for you. If we don't feel that way, we will be very honest with you and tell you that. If it turns out we're not the best fit, you're definitely going to get some insight from talking to us that you're not going to get anywhere else. If we go through a consultation and we know that what we do can help you, we'll be able to tell you on the call a conservative but accurate minimum estimate of how much money we can save you in a given tax year. I hope to see you on a strategy session with us soon. Make sure to keep an eye on our YouTube channel as well as our emails if you're currently receiving them for more great content to teach you more about taxes and what you need to be doing in your business to get the most out of the work you do every year.